Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is August 29th. Today we are going to take a look at Union Pacific. We've covered this one before, I think earlier in this year back in January. Let's take a look at it again. This is out of the industrial sector. This is a railroad company. Let's jump right in. If you want to know more about this company, check them out at www.up.com. That's www.up.com. It all started with the signing of the Pacific Railway Act of 1862 by President Abraham Lincoln. The Central Pacific Railroad of California, chartered in 1861, was authorized to build a line east from Sacramento. At the same time, the act chartered the Union Pacific Railroad Company to build west from the Missouri River. The original legislation granted each railroad 6,400 acres up to 48,000 in government bonds for each mile completed. And so the great race began. And actually, I lived in Utah whenever I was stationed in the military, and you can still see the gold spike there in Utah where they joined the two railways from east to west. Pretty neat to check out if you have not been there. I can't remember the name of the town. It's not too far away from Clinton, Utah. I actually bought my first house in Clinton, Utah there, or I'm sorry, it's not too far away from Ogden. It might actually be in Ogden, Utah, which is not too far away from Clinton, where I bought my first house, which was right outside the Air Force Base there, Hill Air Force Base there in Utah. Fun fact there, I was in the Air Force for 4 years. And here on the right was a map that I pulled from their site. You can see the railway here, Union Pacific Railway, all the different railways that tie together here. Pretty interconnected on mostly the west side of the country there, and down into the south and to the north there. So pretty cool to see. Almost reminds me of whenever I buy Union Pacific shares. And full disclosure, I am long Union Pacific. I do own a nice tranche of shares here. You'll see that here in a little bit. It always reminds me of playing the old Monopoly game. Whenever I buy some shares of Union Pacific, I like to buy the railroads in that game also. But let's keep on going. The reason we are taking a look at them, down 0.48%, not a big drop, but another day where there was a lot of green. Hard to find some companies that were pulled back today. There were a few in the industrial sector. This was one of them, so I thought we would take a look. We are talking about Union Pacific Corporation, ticker UMP, out of the industrial sector. This is a railway company here. Closed out the day at $223.47. 52-week range as low as $183.69, as high as $240.48. They are floating. Actually, they're a little leaning more towards the high, their 52-week high than their 52-week low, floating in the middle a little bit there. I would like to see them pull back further. My cost basis is much lower than this, and I think if I remember, the 50 or 25% of the 52-week low or 15% of the 52-week low is around $211. So I would be interested in this one at about $211 or lower. So it has a little bit more to pull back for me, but it is starting to look attractive again. It had really climbed up here lately. Average volume of 2.7 billion. Today's was 2 even, it looks like, a little over. Market cap of 135.988 billion. You can see that volatility throughout the day. Looks like they had a big drop in the morning, recovered a bit through midday, and then a big drop into the end of the day. Beta of 1.11. They are more volatile than the overall market. That's what beta means. It's the volatility of the market. 1 being the market, anything under 1 being undervalued, anything or under the volatility of the market, anything over 1 being over the volatility of the market. Price to earnings ratio, PE, a little bit high on this one right now, $20.36. Again, I'd love them back in the 211 or under. That brings their PE back into the range where I really like it, under 18 really, 16 around there, 15, 16 average for this one is where I like it. EPS, very nice earnings per share on this one, $10.96 per share. Earnings date, October 18th through October 23rd. Forward dividend is $5.20 paid on the year. They are a quarterly payer. We will see that here in a little bit. Really nice dividend yield on this one, 2.32%. It is higher than the overall market. Ex-dividend date, August 30th. That is tomorrow. So actually, if you were to buy them today, if you buy them tomorrow, you will not get the next dividend. But if you own them today and bought some today, you would get the next dividend. You want to buy them a day before this ex-dividend date. So that would be the 29th today. On August 30th, that's whenever they really record who owns the shares, and that's who will get paid out the next dividend. 1 year target estimate, at least according to Yahoo Finance, $229.16. So they don't see much upside from where it currently sits, but a little bit there. I am not affiliated with Yahoo Finance, just one of the sources I like to go to for information. Now, I like to look at statistics and look at dividend yield theory. To do that, we go over under statistics, go down to dividends and splits. You look at their 5-year dividend yield average, 2.09%. You compare that to the current 2.32 or forward over here, 2.32, same number. And if it was higher, which it is, not by a lot, but it is higher, that speaks to some undervaluation, at least according to dividend yield theory. If this number was under their 5-year average, that would speak to some overvaluation. They are inversely correlated. So that's a good way to remember that. Higher means undervaluation, lower than their 5-year average means overvaluation. So potentially, at least according to dividend yield theory, it is currently slightly undervalued, though it doesn't, in my opinion, offer you much in the way of a little bit of safety there, right? 10 to 20% safety net, right, is what I like to look at for a company. Margin of safety is what Warren Buffett likes to call it. So I like a 10 to 20% margin of safety, depending on how volatile the company is or what the potential drawbacks to the company might be. Now, their payout ratio is low, 47.49%. Looks like they are going to pay out on September 29th, so the end of the month coming up here. We are quickly exiting August and heading into September. This year has really flown by. But let's keep on going here. Under financials, you're going to find a lot of useful information. Their balance sheet, their income statement, their debt to equity ratios, is their revenue growing, all the information you want to take a look at. But what we want to look at here and focus on is free cash flow. We want growing free cash flow over time. That is what they pay dividends out of, and we want our dividends to grow. So the best way to have growing dividends, have growing free cash flow. 2019, 5.1 billion, 2020, 5.6 billion, 2021, 6 billion. Looks like they were down a little bit from 2021 to 2022 at 5.7 billion, but overall from 2019 to 2022, there is growth there. Not a ton of growth, but it is growing, and they are also repurchasing shares. Again, another one that I like to see. Big tranche of repurchase here in 2021 and 2022, so that might be part of the reason for a little bit of decrease even though their free cash flow was higher in 2021. There's my dog barking in the background. Sorry about that. Their repurchase of shares was large as well as their free cash flow here. So good to see growing free cash flow as well as repurchasing shares. Nice numbers all the way around so far. Let's keep on going here. Now, I always recommend more than one source, so another one that I like is stockanalysis.com, and they have 20 analysts that have taken a look at this. They have a low estimate of $182 per share, so if it was to drop down to their lowest estimate, that would be an 18.51% decrease from where it currently sits. They have an average estimate of $239.75, which would be a 7.34% increase from where it currently sits. And if it happened to hit their high of $285 estimate here, that would be a 27.60% increase in the stock price. All the while, if you were to buy them now, you would be collecting that 2.2+% dividend yield, depending on if they pulled back further whenever you bought them. Now, I like to go into statistics. A couple things we're going to look at here: financial efficiency of the company, and to do that, I look at return on equity and return on invested capital. I like 10% on or better for both of these, and return on equity is screaming, 54.3%. Return on invested capital is just above the 10% that I like at 10.70%. And another one that I've added recently is I want to look at the earnings per share, EPS, growth forecast over the next 5 years. I like 5% or better. This one is sitting at 7.74. And I also throw in as a kicker here, revenue growth forecast for the next 5 years is 3.35%. Typically, companies tend to follow their earnings. So if earnings is growing as a company, their share price as well as their dividend should grow over time. So very good numbers overall. Return on equity above 10%, really high. Return on invested capital over 10%. Earnings per share is over the 5% I'm looking for. Overall, very good numbers. Let's look at the dividends here real quick. So as I mentioned before we look at the dividend, I am long Union Pacific. I do own 34.478 shares. My cost basis is $195.19. So again, I like it under 211. I'd love it back under this cost basis, and we saw there with stockanalysis.com, they had a low in the $185 range. So I'd love it to drop back there and it decreases cost basis. But I am willing to buy this one as long as it is under 211. So a bit more to pull back here for me to really jump into this one. But I am up 14.32%. So even if it was to drop back down, I'm not concerned with that. I have $7,696.87 is what it's worth currently. I have $6,729.52 into it. And if it was to drop back down under this 195, I would love to double this up and double my position here. Now, payout ratio, like we saw, 47.49%, very low payout ratio, lots of room to increase this dividend over time. Dividend growth is sitting at 4.84%, so nice dividend growth on this one as well. Very good numbers overall. This is a very old company, been around a long time. To have a payout ratio so low, still with nice dividend growth, return on equity, return on invested capital looking so good, estimated 5-year EPS looking good, revenue growth. The numbers on this one look really good. The only thing I don't like on it is the $223.24 per share. Like I said, I'd love it back under 211. I might even be tempted to nibble a little bit back in the 200 and teens, if it was a drop to 215, 213, 214. So long as I didn't increase my cost basis over 200 per share, I probably would continue to add it there as well. But I love it under 211 or below. This is the vested interest stock screener. This is how I look at a company. This is also how I set up the videos. You can run through this at your leisure. I recently added this one here, earnings per share growth equal to or greater to the industry average or 5% or plus. This one here in green is really focused on financial companies here, right? If it's a financial company, it must meet 6 of 9. If it's a regular company, it must meet 5 of 8. You can use price to book for any company, but it really, really applies to financial companies. Well, that is it for this one. Let me know what you think down below about Union Pacific. Do you own railroads? If not Union Pacific, what do you prefer? I know some people like the Canadian railroads out there. Union Pacific is the one that I have chosen, but let me know if you have one that you like a little better. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this that we're watching and buying, stocks that we are avoiding altogether, tips and tricks that we've learned along the way. We all are at different levels in our investing journey, but we can all learn from each other, our experiences, things that we've learned along the way, especially for some of you older investors out there. You can teach some of us newer investors some things you've learned along the way. Go ahead and share them down in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Union Pacific you'd like me to cover in the stock pick of the day series, go ahead and drop that down below and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by and we'll see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.